Hello, subscribers. Welcome to the Fast Profits Daily. I am Brijesh Bhatia. IT stocks has been tumbling, especially the Infosys, which we have seen a 10% crash yesterday after its quarterly number. Well, this is not the first time that such kind of gap down has been seen in the Infi. Even last year, if you look at April 2022, we saw a gap down into the Infosys post the quarterly numbers, and again the momentum was a bearish. Then a slow and steady uptick was witnessed, but that gap of onto the charts where the gap down was there, it is still acting as a resistance zone. Now again, back into the yesterday session where we saw the gap down, it's been a major gap for Infosys to surpass those levels. Now it will be very important to how to watch how the Infosys in the coming months surpasses 1500 1600 levels, though it's still very far away, 15-20%, but it will be a major hurdle now for 1500 1600 levels for Infosys to cross. And if you look at even the short term, the stock is into the pressure. IT index has been under pressure since its December 2021. IT index is underperforming against the Nifty. I guess it's been around 16 months where the ratio has gone down by nearly 30%, which means that by 30%, Infosys or the IT index has underperformed against the Nifty. So there has been a huge pressure by IT stocks and into the Nifty 50 as well. The HCL Tech, Infosys, TCS, these stocks have the weights into the Nifty as well. So in case, just look at that. If in case Nifty or IT index has slightly being better by 10-15%, we have seen Nifty trending towards the 52-week high, but that's not the case as of now. And for last 16 months, the IT index has been underperforming into the Nifty space. This rally into the Nifty has been largely led by HDFT Twins, which has seen a huge positive momentum. L&T has been leading the markets. At the same time, Infosys being TCS has been trending lower and lower, and most of the even if you look at the Wipro, which is trading at 52-week lows, Infosys trading at 52-week lows, TCS trading near 52-week lows. So, is there any opportunity to go long? As an investor, should you invest into the Infosys after the yesterday's gap down or yesterday's crash, or there are better stocks into the IT space which you should look at, keeping in mind the long-term horizon? So let's start with the constituents first and their weights into the IT index. As this video will be more onto the IT index, how the trend is emerging, what are the key levels to watch out into the IT space, and which stock seems that it can lead into the IT space to the higher levels, or it may outperform. So let's start with the constituents first. TCS leads the table with around 26.5, followed by Infosys with 26.3% weights. HCL Tech, Wipro, L&T nearly 9% weights. Tech Mahindra with around 8.33%. Persistent 4.5%, Emphasis around 3%, Coforge around 2.5%, and LTTS, which is L&T Technology Services, with 1.77% weights. If I just look at a quarter, it's led by the Infosys, which is around 26.33%, and a recent fall of 10% yesterday has been a slight dip pocket into the IT index. Well, we'll look at the IT index first, and then we'll look at the charts of IT index X Infosys, considering the weights. So this has been the weights so far. So we'll look at the first chart over here, which is the weekly chart of Nifty IT index. Now, if you look at these two averages, this is 200 days high and 200 days low average. 200 weeks and 200 high, 200 weeks high, 200 weeks low average. So if you look at the blue line, which is the 200 weeks high, and the orange line, which is 200 weeks low. Again, this is a long-term average I'm looking at as an investor, not from a trading point of view, these levels. But if you look at right from 2000, around 5-6 level, 2005, 2006, every time the index tests this band, it acts as a support or resistance. Only between 2008, 2009, when we saw a market fall, and 2020, where there was a pandemic, we have seen this index sloping below these levels. And every time, if you see, there is a zone which acts as a demand zone, and every 3-4 years, it comes to test these levels where As an investor, it is an ample opportunity to accumulate the IT stocks. Now look at since 2009 when it came higher up about 2013 it retested 2012 second half it retested around these levels, so 3 years of gap. It consolidated. 2013-14 was a year of consolidation, and we saw uh, even in those times these index was holding this zone, the buying zone of 200 week high and 200 week low. Second back it came in around 2017 and 2018. It retested zone, so around 3.5 4 years it retested those zone again. Again accumulation was happened around this zone, and we saw a rally uh, till 2018 2019. During the pandemic as well, we retested those low. We went below those levels, but came back very, very strongly. And again, 2020 was a V-shaped recovery, a different perspective to the markets. But again, onto the charts, it acted, it took support over there, and again went higher. Now back in 2023, so after nearly 3 years now, we have seen these average being testing around, and their buying zone is there. So if I just look at the zoom out the current phase over here, so if you look at the chart over here, uh, it has tested 200 weeks high. So now I think to 26,300, 25,200 will be acting as a major demand zone for IT index. Again, there is a band of around 4%, 3.5%, 4%. But yes, look at the structure over here. Every time the bullish zone it's been testing, it is time for accumulation onto the IT stocks. Now, what could lead onto the IT space? As I said, Infosys is one of the downtrend. We have seen a major downside coming into the IT Infosys space, and being a quarter weight, around 26% weights, it has certainly puts pressure onto the IT index. And as I said, it holds the weights into the Nifty 50 as well, so that it is putting pressure on Nifty as well. But considering the IT index in the as of now, if I just move on to the top down approach, move on to the daily chart. Uh, Again, important, very, very important level. Right, look at right from around mid of 2000, June of 2022, the mid of 2022, index has been acting support at around 26,300, 26,250 levels. Even in yesterday's session when Infosys was down by 10%, it acted support at the horizontal trend line, the blue line over here, and it formed a bullish candlestick pattern, which is if you look at the over here, it has formed a bullish candlestick pattern over here, and it is moving higher. It is sort of hammer, which is again a bullish candlestick pattern indicating a bullish reversal over here. Look at the wick over here and look at the reversal forming. After opening gap down, it slow and steady headed higher and closed near the day highs, which is again a bullish scenario. Or some may even consider this as a dragonfly doji over here, because the body is very, very smaller. So both in fact are the bullish candlestick reversal pattern over here. So these week around 28,500 will be acting as a major resistance zone, but slow and steady I believe this candle formation generally take time to reverse, and slow and steady bullish momentum may come into the place onto the IT index. What could lead, as I said? So let's look at the first Infosys by the Nifty 50 ratio, how it is panning out with around 26% weight. If I just look at uh, in the recent scenario also, it is being putting pressure onto the Nifty. So if I am comparing Infosys with the Nifty IT index over here, we are witnessing a breakdown over here. So breakdown was there a couple of weeks ago, but it was holding the long-term average of around 200 weekly exponential moving average. So if you look at the orange line over here, so it has been holding 200 weekly exponential moving average. And if I just look at this time, it has broken down on convincingly over here, and the slope is very, very downside. So with the trend line breakout, the red one with the 200 weekly exponential moving average breakdown, I believe Infosys is an award into the IT index. Now, if I just look at the IT index excluding the Infosys, so what I have done is I have taken weights, actual weights of all the IT stocks, and excluding the Infosys, and I have plotted the chart over here. So if I just look at, it is still trending at a major support of rising channel pattern over here. So if in case if I just look at the structure over here, the momentum seems a pause to the bearish over here. Indexes reversed right from the support area. So it will very, very important to how to watch out how these pans out. Uh, and if I just look at the rising channel, if I just look at the momentum over here, okay, this is an a momentum has been coming back very very strongly. So if in case we surpass the upward side, the bearish momentum may negate onto these stocks which are excluding the Infosys. So I have taken, again I repeat, I have taken a weights stocks into the actual weights of each stock into the Nifty IT index, and I have just plotted over here. So if I just look at the momentum, seems that there is no breakdown as of now if I just exclude the Infosys over here. Next chart I want to highlight, which I believe which can lead onto the Nifty IT index onto the higher side. TCS. Now, if you look at this TCS, again TCS was again being not on a positive side yesterday, or I would say the IT index has been downside, which has led to the breakout into this chart. So if I just compare, if I just look at this ratio chart of TCS by Nifty IT index over here, look at the breakout over here. The pennant breakout, bullish pennant. After a rally, there was a consolidation into the triangle structure, symmetrical triangle pattern, and we are witnessing a breakout over here. So it will. This is a weekly chart. So after a consolidation, long consolidation, there is a breakout. Breakout may retest, and we may head higher onto the TCS by Nifty IT index ratio chart. I believe it is time that TCS will lead the IT index onto the positive side. Though for quite for last 6 months, it has been hand on hand with the TCS versus the Nifty IT index. But this time, I believe IT index can be led by the TCS onto the bullish side. Second stock, which I believe, again, TCS was around 26.5% leading the table onto the constituents and weights. The third is the HCL Tech. And if I look at with the 9% weightage onto this chart, look at the breakout from the previous two highs. I would say, even if you look at the 2021 highs where HCL Tech was outperforming into the Nifty IT index, now it has surpassed those levels and trending at around all-time high. I would say the 52-week high. Look at the structure over here. The major resistance zone has been taken out, and the momentum is very very bullish onto the weekly scale. If this bullish momentum continue, HCL Tech will continue to lead higher. Now with the 26%, 26.5% weights of TCS and 9% weights of HCL Tech, it sums up to around 35% weights, which can lead IT index onto the higher side. These two stocks have the potential to head higher or lead into the IT index. The fourth with around Wipro, which has the weights into the IT index, it's been struggling onto the head higher. We have seen a breakdown coming into the Wipro by Nifty IT index, which means that Wipro will continue to underperform into the IT space. And as I said, it's been trending at around 52-week lows for quite some time. It doesn't seem an exciting opportunity to look into the Wipro as an investment, comparing with the TCS and HCL Tech. Tech Mahindra, the next chart, if I again look at, it's been consolidating in a triangle structure formation. So it is not a clear trend. It means that if it, as it is consolidating in a triangle structure, it means that it is going hand in hand with the IT index. So Tech Mahindra sometimes outperforms by a smaller margin, sometimes IT index outperforms by a smaller margin. So in this case, what we have seen in the recent times for last 5-6 years, it's been trending hand in hand. So it's been sometimes a ball moving into the IT index court or ball moving into the Tech Mahindra court. So it's been a hand-on-hand momentum, and still there is a no clear trend of Tech Mahindra being outperformed by a bigger margin into the IT index. So yes, this seems a triangle structure. So just to sum up, it's been time that if I just look at the IT index, it's been trending at a major support, trending at a demand zone for an investment between 200 weekly high moving average and 200 weekly low moving average, exponential moving average. And if I just look at the daily chart, as I said, it's been forming a bullish reversal candlestick pattern right at the support area. So it's being adding up or a bargain buying opportunity into the IT, and I believe that not maybe a day or a week or a month reversal, but I think it for a 6 months or 12 months down the line, those who are looking for an IT investments, definitely there is an opportunity which could be led by TCS and HCL Tech into the future. I would like to avoid Infosys at current point in time after a 10% crash, because there are multiple gaps, and the recent gaps also will act as a major resistance zone into the Infosys. So I would look for TCS and HCL Tech to lead the IT index onto the higher side. Signing off, Brijesh Bhatia.
Thank you for tuning into Equitymaster's YouTube channel. If you enjoyed this video, we've got many more valuable investing ideas for you. Click the link in the description to access them now.